So yes, it's BG Dollars back for look on your screens. Finance Fridays. Now, of course, do read the bit down here. BG Dollars, subscribe, like, and comment. Now, this is going to be not really a video, more of a sort of stream, but it's not really a stream because obviously it's not live. So I can't really call it a stream, but it would have been a stream, but I don't really know how to set up a stream. And I'm saying the word stream too much. But sit back, relax, get some munch or something. I'm going to pour a beer because it's a Friday. And whilst I'm pouring this, make sure you are subscribed, you know, on your screen in front of you. Now, I don't want to give this too much head. Ignore the statement there. Look, the beer's looking nice. It's obviously, look, crony time. Pint of crony. And as I said, it's a Friday, so I go out. Oh, hands aren't looking that steady, to be honest. But yes, Finance Fridays, every week from now on, it's going to be me, a slideshow of just all the updates of what's happened in the week. You know, what's happened in stocks, what's happened in the news. So I've almost finished pouring this can of beer. And yeah, the rule is, whatever the level of the beer is by the end of this video, got to down it. It's going to be a long one today, folks. That's what I said. Get some munch and sit back. Finance Fridays, do subscribe. So, of course, first of all, let's start off with a sip of crony. No, you thought I was going to say biggest weekly movers. A sip of the crony. Oh, no, I didn't want a beer tash there, but this is tasting nice, this. Right, now let's... oh, sorry about that. Let's move on to biggest weekly movers here. And as you can see, the risers, look, you had a firm up 26%. Big move there for a firm from Friday of last week to Friday of this week. You had Coinbase up 23%, Fastly up 22%, Roku up 21%, Rocket Companies up 20%, Real Estate Maneuver going up 20%. Kind of odd that, but I suppose it is what it is. Honest up 20%. And yeah, say no more. They're your risers. Of course, a risk on week, isn't it? I mean, look, you've got Roku and Coinbase both in ARK, so ARK would have done extremely well. Affirm, the classic old buy now, pay later scheme there. Good company though, still great growth ahead of them. But yeah, I wouldn't expect that to do well. Of course, let's move on to the fallers now. Southern Energy. I don't know if you can see this because my head might be in this corner. I just realised. But this is Southern Energy and it's down 25%. And then Aero Clean Tech is down 42%. Now, of course, if this is a little bit of a bumpy one, don't worry, I'll sort it out for next week. But do still watch anyway. Look, bottom line is all energy stocks were down this week. Of course, I've only got 2 fallers and I've got 6 risers and only 2 fallers. So you're probably thinking I'm slacking on the fallers department. But look, I couldn't really find many fallers. You know, I had Southern Energy down. As I said, 25%. Aeroclean was down 42%. And Aeroclean is like a what's it called? It's like an air diffuser sort of thing. Bit of a weird stock that. I wouldn't even thought of that. But no, I saw it down and I thought I'd whack it in the slideshow. But anyway, we have got some juicy news ahead. Sector movements for the S&P 500. Now on your screen, you can see, this is just a screenshot by the way. This ain't like the actual thing. 5 days. Look, this is the sectors. My bad. For each individual for the S&P 500. Look, again, on this, you're going to see me just fluff up and mess up because I ain't editing it. As I said, this is Finance Fridays and you just sat here with me with a beer. And it's unedited. So it may as well be a live stream, but it ain't. But next week, hopefully it might be. Well, you'll have to wait and see. But as I said, do subscribe. But anyway, look, back to this. 4.81% on the 5-day maneuver for healthcare. So healthcare, best performing sector. But look what happened today, Friday. All sectors were up. Yeah? Look at this. Boom. All in the green. And that's what I like to see. That's what I love to see on the S&P 500. Energy was the worst performing sector. And there it was in the past week, down 13.55% in the last 5 days. Atrocious week for energy. But of course we want that. We want inflation to start coming down, don't we? Energy has been rocketing. Sorry about that. But look, I don't want to be left with half a pint of beer by the end of this slideshow and have to down that for you lot. So I'm going to have to drink some whilst I'm talking. But yeah, energy has just been rocketing up recently and that needs to start coming down. As I said, healthcare was the best performing sector in the past week. There it was up 4.81%, but nothing much more to be said on the sectors. Of course, if you are playing the game of timing the sector sort of rotation, it's a risky one. It's a very risky one because it's hard, but I suppose if you are timing the game, then you would be right bad. Look, beers are gassy, all right? Beers are quite gassy. You know, the Kronenberg's got a bit of a fizz to it. So, but yeah, anyway, if you are trying to time the sectors, then you would be shorting energy, I suppose, and you'd be rotating, if you like, into healthcare. But let's move on. S&P 500 performance, look at that, look, up 5.57% in the past 5 days. Now, I'm just going to sit and watch that, because that's a rare sight in these days, right? Past 5 days, up 5.57%. This has given me an opportunity to just sit here and drink my beer looking at that screen, because that is beautiful. And it gives you a chance to obviously hit the subscribe button. You see that? I'm plugging it. Plugging it. Oh, that's a banging beer, that. It's nice and cold, you see. It's a hot day. It's quite humid here. Obviously, I'm from the UK, so it's quite humid, which is rare. But yeah, S&P 500, as you can see, up 5.5. You got the Nasdaq. Boom, up 7.08%. Beautiful performance on the Nasdaq. Round of applause, everyone. The Nasdaq has performed very, very well. That's cracking stuff, that. And it shows it's very, very risk on, wasn't it? Nasdaq up 7. That's the QQQ. You're probably thinking, oh, that ain't the Nasdaq. Well, it is. It's just like an ETF version of it. But no, it's the Nasdaq, right? And yet the Russell 2000 up 5.98%. So shout out to all the small caps. You know, I'm invested in Stoneco. And yeah, it's doing great. It's doing great. I bought in at 8. I think it's up to $9 just over. So I made 10% in just a little swing trade of a few days. So no, that was very good. But yeah, let's move on. So we had the indexes. Now, of course, Monday was a bank holiday in the US. So you're probably thinking, well, why am I starting on Tuesday for this Finance Friday? But Monday was bank holiday, so the whole business came out with Tuesday, and the first sort of data to come out this week was existing home sales. We've got existing home sales on the Tuesday morning, and these were the two major points that I could get from the report. So existing home sales declined for the 4th straight month. Hold on. That was such a shite burp. But look, you have to just allow me on that. Okay, as I said, cronies can be quite gassy. But yeah, declined for the 4th straight month to a seasonally adjusted annual rate of 5.41 million. So this basically means that home sales for the month reached 5.41 million existing homes. So this ain't newly built homes. This is homes that people already live in and they're looking to sell. Or they were built ages ago. But sales were down 3.4% from April and 8.6% from 1 year ago. So that just goes to show that, look, home sales are down month over month, year over year, massively. Now, what does that say? Does that mean it's either one of two things? Are people not selling their houses? Which just wouldn't make much sense because surely now would be the time to sell if you think the recession is coming up. Surely now would be the time to sell if you think interest rates going up. Surely now would be the time to sell if the 30-year mortgage rate's going up. Surely now would be the time to sell if supply is going up. But people aren't. So it could either mean people aren't putting their houses on the market and up for sale. Or it can mean that people just aren't buying it. And I'm going to go for the latter one because that would make much more sense, seeing as inflation, prices at the pumps, is taken away from people's income. Prices on the bills is taken away from people's income. Prices on the shopping bills, on the supermarket buys, is taken away from people's income. People ain't got no money left. And so, who's buying a house when they ain't got money? Huh? You tell me. Exactly. No one's buying a house if they ain't got the money to do so. Next point, at $407,600, the median exit. I don't know why I've got a comma there. Please do ignore that. I think that's supposed to be a full stop. Actually, no, that makes sense. At $400,600, the median. Yeah, okay. The median existing home sales price exceeded $400,000 for the first time and represents a 14.8% increase from 1 year ago. So that just means the median price of an existing home has gone up 14.8% in 1 year. Which just goes to show inflation, folks. You know, it's not just bills, it's not just prices at the pumps, it's housing prices as well. So that was the news for Tuesday. Shocking news, really. But let's get on to the next one. Existing home sales chart. So this is obviously for this one, existing home sales, and this is a chart for it. And as you can see, boom, we've been declining big time. Early 2022. This was Jan, Feb, we had a little spike up, then March, April, May, June, boom, we've just been rampaging down. And yeah, obviously the same happened during the COVID. We ran straight down there. But yeah, we're starting to see that decline there, which ain't looking great for future. Wednesday, obviously we had the Fed chair Jay Powell testifying, and this is what he said. Now I was actually watching this. I didn't actually watch all of it. I came in halfway through because I think I was out, and I came back home, and yeah, he was already doing it, and yeah, I missed a bit of it, but I managed to get a bit of it, watch a bit of it anyway. See, as you can see, my words are all mumbled. This is why I'd be editing if it was a video, but it's like a live stream, so I can't do that. Yeah, US recession, certainly a possibility. He came out and said that. That's big words, you know, for Jerome Powell. Now, people say J Powell, people say Jerome Powell, people say Papa Powell. Now, the last one's a bit cringe, so I don't really like to say Papa Powell. But I know some brothers out there like to say that. But that's not something I'd say. But anyway, yeah, he came out testifying saying, recession certainly a possibility. Notice the difference between that, when he said that, and when he said, we're going to have a soft landing a few meetings ago. Didn't he? No, he was like, a few months ago, he's like, oh, look, we'll have a soft landing. Unemployment rates won't have to rise. And now he's saying, oh, look, recession is certainly a possibility. What a tosspot. But look, we got to roll with the punches and just take it on the chin. That was Wednesday. He also said, Fed rate hikes won't bring down gas or food prices. Well, that's when inflation's at its highest, people, in gas and food prices. And you're saying the rate hikes won't bring that down. That's what I mean. Look, sometimes it ain't down to America. Sometimes it ain't down to the Fed. Gas or food prices down to... Oh, sorry, I did jog there. Look, I'm not exactly drunk, but I had a couple before this. I'd had a couple before this, so this is my... I don't know. Look, we're moving on. Yeah, they won't bring down gas or food prices. So the Fed rate the Fed rate hikes won't bring down gas or Look, the Fed rate hikes won't bring down. We've said this already, okay, Brad? Like, let's just move on. Look, we are strongly committed to reducing inflation. He came out and said that, boom, straight off the bat. We're strongly committed. This is what we want to do. Boom, we're doing it. And he's reducing inflation. That's what he's raising interest rates to do so. He's becoming hawkish. We need to get inflation under control. And he came out and said that quite strongly in his testify. So, now this one here you're probably thinking is a quote. Asset prices. He did not say this. This is my improvisation of basically what he was trying to say in the meeting. Alright, asset prices must come down. He did say that. We need price stability. He did say that the housing prices are inflated. Okay? The housing prices are far too inflated and we will be working on bringing that down. That's bottom line what he was saying about the housing market. He was like, look, of course, they've been roaring, haven't they, in recent years, going up massively. And we need to start bringing them down. And notice that his interest rate hike meeting, he was saying about the what's it called? The fact that first-time home buyers, look, it's a risky business getting involved now if you're a first-time home buyer. I wouldn't recommend it, which is strong for the Fed. But of course, Wednesday we had this plonker do a talk. He called on Congress to suspend the federal gasoline tax to help price at the pump. I rate that from him, to be fair. Obviously, he is helping out the people with that one. He is doing his job. So I rate that from Biden. He called on the Congress. He wanted to help the people out of the prices at the pump. And he wanted to suspend the federal gasoline tax, which I rate. But something that I don't agree with here is, well, first of all, he didn't say anything else, really. Now, I hope you do have some food and drink out watching this, because, yeah, it's a long one. As I said, it's a long one. But he didn't really say much else. So there ain't much to write, which is why you're probably thinking, well, look, you've wrote paragraphs on the other one, on the other slides, and now look, we've got nothing to read. And I'm like, look, well, tough titties, mate. Yeah, didn't say much else. Other than recession not inevitable. He came out and he said that. And, well, I think this man's just pretty stupid for coming out and saying that. This man right here, look, he's looking dapper in his suits and his... So, yeah, he's looking dapper, as I said. But, look, this is stupid. Recession not inevitable. It is, folks. It is. Why? Because we've got interest rates continually going up. We've got the Fed saying, look, we ain't stopping here. We're going to continually rise the interest rates, and they're going to go up and up and up. Right? The Fed has started to say, look, softish landing, very, very hard to do now. Inflation ain't seeming to come down. Interest rates are going to be going up higher and higher. Unemployment rates might spike. A recession is possible. That's what he said on the last slide. Look, US recession is certainly a possibility. And a couple of months' time, we'll be saying, we are in a recession. Thursday, look. Weekly unemployment claims came out. Expected. I just bit my tongue. I didn't really bite it because obviously I'm not eating food. So you're probably thinking, well, how is he biting his tongue? But I just like jabbed it with my back tooth. Like, I don't really know how that's possible, but I done it. All right. So suck on that, mate. But look, weekly unemployment claims expected 227k, result 229k. So more than expected on unemployment. And look at this chart. Look at this chart, folks. Since about March/April, we were down here. Now look what we've started doing. We've started rising up. The dashed line is the weekly unemployment claims, and obviously the bold line, like the thick line, the actual line is moving average. Okay, and that just goes to show. Look, the moving average has started to point up. Look, unemployments are on the way up. Right. Well, we got unemployment claims starting to creep up, and look, as I said, look, bomb is right here. It's right here, folks. That is not good news at all in terms of recession. Sorry, as I said, gassy beer, isn't it? Oh, proper. You know what? I'm gonna bang on the glasses. We're back. I just spotted these to the left of my camera. I was like, I need to wear them. I'm not coughing on them. I'm just trying to clean them up a bit. Now, I'm not saying they're dirty either. Look, I've got myself in a mess now. I'm not saying they're dirty, but I'm saying they could do with a little bit of a... You know, because I want to be able to see the screen clearly. They've just got some smearage on it. That sounds mad. Okay. Now, of course, we have to do the outside. Oh, look, my reflection. Oh, is that what I'm looking like? Jesus. We're looking alright, to be fair. There we are, look. Looking polished. That's what I want for my sunglasses. Polished. Right, we've got to do this. One more side to do. And I said, just subscribe. Just click the like button right now, you know. Hey. Doesn't hurt. Huh? Alright. They're getting banged on. Whoa. To be fair, I actually quite like looking at these sunglasses. They're kind of weird, but they're all right. But as I said, look, unemployment starts to rise. We're moving on to the next slide at this point. Unemployment claims by state. Big slide, this one. And now look, Alabama, 241 change. Oh, so they got 241 more people in Alabama unemployed. Oh, no. All these are hit and miss. 847 up in Connecticut. Aye, Connecticut folks. Risky business living there. Maybe you may as well move out now. Florida. Oh, Florida's the place to be. Hey, I might move out to Florida. Look at that. Minus 1,257 on the unemployment claims. That just goes to show that they got a strong business out in Florida. Oh, Jesus. Is that Illinois? Minus 2,000. Blimey. I'm banging off Florida now. I'm moving to Illinois. Hold on, is there anything more than that? Nah, I'm moving to Illinois, mate. See you later. I'm moving to Illinois. Minus 2,476. Strong business in Illinois. That's what I like to see. Ain't no one fighting for unemployment out there. They're back in jobs. Michigan. Do not go to Michigan. I am sorry for people living out there in Michigan right now. 1863, you know. We're up from 6,155 to 8,018. It's a banging beer. Banging. That is very nice, that. But yeah, as I said, look, 1863 for Michigan. So that shows that Michigan, worst performing state in terms of unemployment claims. So people are losing jobs quick in Michigan. Ain't looking too bad. And yeah, if you just want to pause it or just I'll leave it on your screen to find your state. Now, as you can see, it's alphabetical order. So people from Wyoming and that, you ain't going to be able to find it because it only goes to Virginia. If you're from West Virginia, tough luck. Yeah, you ain't going to know. Sorry. But yeah, Wyoming. What other ones are there? There's no West Kansas. Look, I don't know. West Nevada. No, there's no West Nevada. Oh, as I said, gassy. Look, they make you burp sometimes. But yeah, that's moving from the unemployment claims. Of course, this is insured unemployment for a week ending June 11th. But that one's just a bit meh. So yeah, folks, let's move on to the next one. Thursday, PMIs. Huge misses on the PMIs. PMIs track, this is what a PMI is. If you didn't know what PMIs are, let's just quickly go through it. They track variables such as output, new orders, employment, and prices across key sectors. So they're for businesses, all right? This is business output, new orders. Our businesses are going with employment, business activity. That's what it tracks. Early indication for the months of business activity. There we are, look, bomb. Didn't even need to listen to me. If you read the next bullet point or the next line, you knew. Yeah, anything above 50 shows business expansion. Look at me. Look at BG dollars. Oh, mate. I'm actually styling. This is a sick slideshow, you know. It took me time to put together. I didn't realise it was in this much detail because obviously I've been writing this as the day's been going by. Decrease in export orders first since December 2020. So obviously this was first of all, let's have a look at the expectations. So 56 the expectations. Boom, we got 52.4 for the flash manufacturing PMI, and then expectations 53.9. Boom, we got 51.6. We're getting dangerously close to below 50, which is when we start to contract, because anything above 50 shows business expansion. So you guessed that anything below 50 shows business contraction. Businesses start to lose money, they start to get slower, start to get smaller. Yeah, decrease in export orders first since December 2020. Not good at all. Input costs and output charges rose substantially. Again, inflation. It ain't subsiding, is it? It ain't going away. Inflation's putting up a fight here. Client demand dropped for the first time since July 2020. Yeah, it just goes to show businesses are out here struggling. Yeah. They're saying, look, expansion is coming to an end. We're starting to get this contraction period. Of course, interest rates going up. That's what the Fed wants. The Fed wants to reduce inflation. The Fed wants people out of jobs. I'm sorry to say that, people. General public, the working public, working class, anyone out there, middle class, anyone who's got jobs, the Fed wants you to quit your jobs. The Fed wants your boss to lay you off. I'm sorry, but they need unemployment to go up for price stability. They need unemployment to go up so you stop earning money, so you can't spend no money no more. So then you aren't pushing up inflation. It's the harsh reality of it. Look, I ain't trying to do it. I feel for anyone. I'm trying out here to get a job and I can't. Like, that's what I'm saying. That it is what it is. That's just the life of it. Of course, we need price stability, because if we don't stable prices, if people don't lose their jobs and they're spending, it's going to go into hyperinflation, which is where the country's fucked at that point. Look at Venezuela. They're gone. Ain't no coming back from that for 20, 30, 40 years. It's so difficult at that stage, and it's poverty. It's a lot worse of a life than just losing your job and filing for unemployment, okay? We're big nations. We can hopefully deal with it. Friday, look, new home sales. Okay, so Friday, the new home sales data came out. Sorry, I was flicking through that. I just didn't really understand my slides, because you got to understand, I did write this ages ago, so I forgot, kind of lost where I was at. But anyway, Friday, new home sales came out, and as you can see, look at that. In 2021, boom, we were up here, trading very, very well. We started to drop off. We started to come back a bit, fighting. Boom, we've dropped off again early 2022. Now look what happened. This chart is actually an abomination to the new home sales. Look at this. 2006, boom, we were up here. We were at all-time highs. 2005, we were up here. 2004, boom, we were up like this. Boom, it's just awfully familiar to this sort of period. This period here. And then look, we started to drop off. Came back a bit. We started to drop off. Came back a bit. Started to drop off again. And look, we were dropping until 2009. And of course, the peak was a good 2 years before we hit a recession. 2008 was when people started really feeling it. And it was a struggle for many. And that was 2 years before the recession really took place. Boom, again, we see 2021. My prediction is late 2023, unemployment rates will be high. People will start feeling it. And I've been saying this for weeks, and I've been saying this on my videos. If you ain't subscribed, then that's your fault. Yeah, you don't deserve the knowledge. But to be fair, you're watching it right now, and you've been watching this video all the way through, so you do deserve the knowledge, and do subscribe. I'm sorry for being so mean on you guys, alright? I'm sorry. Look, I've drank some beers. They've been a bit gassy on my stomach. Look, it ain't going great, alright? I'm sorry. But Treasury yields down. Hey, we haven't mentioned Treasury yields yet. That's a big thing. Treasury yields down. US Treasury moving downwards. Does that mean investors are rotating back into stocks? Question mark. But my grammar's a little bit shite for a question mark. But look, US Treasury's US. See, again, if I was a video, I'd be editing that out, but it's not. It's a stream, so we have to just stick it in there. US Treasury is moving downwards. Of course, as I said, if we see Treasuries moving downwards, that normally means stocks go up. It normally means that investors are rotating out of bonds into stocks. They're going risk on, and we've seen that in the market, haven't we? We've seen big pushes in the markets. We've seen S&P up 2%, 2.5% today. On the 5 days, up 5.8%. We've seen the Nasdaq push up. We've seen small caps push up. We've seen risk on stocks going mental. We've seen TARC up, flipping, God knows, 30, 40% in like 3 days, something nuts like that. So look, risk on when Treasury yields, not builds, Treasury yields move down. And that just shows that investors are going risk on. Why? Well, maybe they think inflation's subsiding. Maybe the Costco news, the inventory news. Maybe the 75 basis point from the Fed. Maybe the oil coming down means that investors are starting to realise inflation might be subsiding. Let's go risk on. Who knows? Who knows? No one. That's the answer to it. No one knows. But that's my guess. News next week. Big week next week, folks. And I'm putting the beer down for this. Look at that. G7 meetings throughout week. G7 meetings throughout the week. Sorry, my grammar's bad again. But yeah, the Monday to Wednesday G7 meetings, again, not really any economical news there, so I'm not really too fussed about the G7 meetings. I'm taking the sunglasses back off because for these last few sides, I want to be able to see your look at the screen, yeah, and be able to see your sort of reactions or your sort of, you know, make eye contact with the camera, because these sometimes block it out and I can't really see properly. And I'm thinking, look, I can't connect to my viewers. And as I said, this is important stuff. News next week. Look, Monday, pending home sales. Again, we're going to see more about the real estate, the health of the real estate market. That should be interesting. Tuesday, consumer confidence comes out, and that is a huge one. I was going to say big, but then I thought, now we need to switch up the adjectives because that doesn't quite reach the ambition of consumer confidence. So I had to use huge to get that across to you lot. Consumer confidence, that's a huge number that we've got to be looking into there. Tuesday's going to be a big day because the consumer is the one that controls the markets. The consumer is the one that spends the money. It's us. The consumer is the buyers. It's the working class. It's the majority of the population. It's the people that spend the money at the businesses, and that is huge because consumer confidence means if there's consumers confident, they're more likely to spend their money. If consumers not confident, they're less likely to spend their money, more likely to save. And that's not good if you want to be business growth and expansion. Wednesday, you have GDP. Ooh. I had to have a sip on my beer for that one. GDP, quarter on quarter, recession, question mark. Of course, the first quarter came in negative. If the second quarter comes in negative, we are officially in a recession. Officially. Going by the book. If we're going by the actual definition of it, quarter on quarter, negative GDP, you're in a recession. Official recession. Also on Wednesday, we have the Fed Chair Powell speak. So we've got 2 big days there, Tuesday and Wednesday. Of course, the market's going to be moving big on these results. And the Fed Chair Powell, look, who knows? Most of the time he says the same sort of thing, but sometimes he just comes out with some bizarre statements that moves the market massively. Chair Powell, if you're watching this, be careful, sonny boy. Don't be saying nothing stupid. Right? I don't want my stocks to just be flying down low. See, I use that flying down low, but if you think flying, it should be going up. But it says like flying down low. So it don't really make sense. But as I said, I've had some bevs, so it ain't really. The Thursday, core PCE comes out, price index, inflation reading. Is the core PCE, obviously excluding food and energy, going to come out high? Who knows? Nobody knows. My picture might be in the way again. I do apologise, but I'll be telling you what it says anyway. So don't threat, you know. Don't get upset or anything. All right, look, I'll be saying unemployment claims is right here. Okay, this says unemployment claims, and who knows what unemployment claims is going to come out. Obviously, it comes out every week anyway, so that ain't exactly massive, I don't think. This one says personal income / spending. Another one, but I would say consumer confidence sort of gives us a reading for that, for personal income / spending anyway. So if we have a high consumer confidence, then we know that personal spending is going to be high. But personal income, wage growth, I suppose that's something important to note. Friday, we've got the ISM manufacturing index, and I know you're probably not going to be able to read that, but maybe you might get a Turing index. Turing index, and you're probably thinking, what the hell is that? It says ISM manufacturing index, right? And again, not really that big of a news, to be honest. I've nearly finished the beer, so I've done well. Haven't had to down much at all. But we've probably still got like an eighth, maybe a fifth of a pint. So we've got to be careful. But yeah, manufacturing index that comes out. Not really big news, to be honest. What are my predictions for next week? Well, look, as you can see, this is what I think is going to happen. Pending home sales, beat expectations. Consumer confidence, below expectations. GDP, beat expectations. Core PCE, meet expectations. Unemployment claims, beat expectations. Personal income / spending, miss expectations. ISM manufacturing index, miss expectations. expectations. So that just goes to show that I think the consumer is going to come out very bad. Look, consumer confidence below expectations, personal income / spending miss expectations. I don't think the consumer is going to come out very well. Core PCE, another big one. Inflation, meet expectations. Look, I don't think core PCE is going to come out too bad, to be honest. GDP, beat expectations. Yeah, I don't think that it's forecasted minus 1.5% from the last quarter that was already down. So look, I don't know, but my expectation is it's going to beat it. I don't think it's going down by minus 1.5% GDP for Q2. And of course, if you want to see whether I'm right or wrong, next Friday, on Friday Finance, I'll be showing all these and it will be revealing whether I was right on them, whether I was wrong on them. And maybe if I'm wrong on them, I might do some forfeits. Who knows? Maybe we could do that. I'm going to spice up the content a little. Who knows? I'll have to see closer to the time, and I need to fart. That really wasn't bad at all. It wasn't even a fart. It was just like a small one. I wouldn't even count that as a fart, to be honest. So, yeah. What I think for stocks next week? Nah, it's not smelling bad. We're all right. We're all right. No, because you have to give it a few seconds for it to fuse into the air. And you can't just smell straight away once you're done your fart. You have to give it a few seconds for it to diffuse. Then you can smell if it's bad or not. S&P 500 continues moving upwards. I think that will happen for next week. Small cap stocks perform well. I think that will also happen. Travel stocks perform well. Energy to continue moving downwards. Risky stocks, cannabis plays, unprofitable businesses push up. Crypto to also continue pushing up. So look, bottom line is I think it's a very risk-on week next week. I think a lot of the riskier stocks, or so-called riskier assets, as I said, the so-called riskier assets will do well next week. And that's my prediction for it. Stocks to watch. Roku. Coinbase. Talk. You're probably noticing, why am I drinking more of my bev? Well, it's because I know this is the last flipping slide and I've got to down the rest of it once it's done. I'm the creator of it. Unlucky, mate. You're fuming. You're fuming. You're fuming. But anyway, look, stocks to watch. Roku, Coinbase. Big moves, I reckon. TARC, big moves again. If it's a risk-on week, TARC's going to be up massively. Carnival Cruise Lines, again, a travel stock, a travel play. Who knows? It was up today. Travel stocks are up hugely today on the Friday. Could be up again next week, honestly. StoneCo, my new investment. If you haven't been watching my videos, then you wouldn't know about it. And subscribe, because StoneCo was my most recent investment. I'm already up 10% on it in the past few days. It's a small cap. Because the market's been risk on, StoneCo has been going up. But it's a huge play. And it trades in Brazil. So it ain't a US, it's a Brazil stock. So you're probably thinking, it's a bit odd. But yeah, do subscribe and watch my previous videos, and then maybe you'll learn more about the StoneCo investment. FedEx, again, it's a travel sort of play. It's not like your cruise lines or anything, but I think FedEx is undervalued, so I think that'll do well next week. And Zendesk, they've been taken over by a huge company, and they've been falling down quite a bit recently. So Zendesk is another one to watch out for next week. And look, that's the end of Friday Finance. If you're still watching at this point, bloody hell, what have you been doing? You must be bored, mate. I'm joking. Thank you so much. And do subscribe if you're still watching at this point. And obviously, I've got to down this. So I've done pretty well in terms of the beer escapade. So let me just drink this. That was very simple. I don't know why I'm pulling a face at that. That was a nice beer. And as I said, Friday Finance, every single Friday. Join me next week. You can see how my predictions went. You can see the news for that week. You can see all of the results that obviously we've got coming up next week, the PCE and all this that I've mentioned in today's video. You can see forecasts for the week after that. You can see how my stocks performed. And yeah, thank you for watching. And as I said, I'll see you in the next one, people. That's been Friday Finance, and it's BG Dollars over and out. See you later.